upload on my YouTube channel. So it's been a long journey, and uh, I really thank God for making this to happen. And I'm really pleased, and what you can say, whatever things I have contributed to the trading society. So as a whole, I really appreciate that I have done so much, and there is a lot more to be done. So I'm expecting towards, inshallah, if I get opportunity, then I will be of the service to this trading community, so that all the traders thrive and like they survive and they learn things in a proper manner. And I will continue to contribute in that, educating new traders and as well as older traders. So coming back to like uh, the intention of today's video is simple, is to get you people acquainted, like whatever trades we have got based on 213. This 218, I haven't conducted any video on this one. So this is an outcome of a request done by many traders. So because they want to see if there is a volume of, there is, like for example, if there is buy volume and there is sell volume. So which one is superseding, which one has a more control over the price action particularly taking place at this or in current scenario. And to relate to this one, I made a 219 version of the same indicator, wherein it would be helpful because many people they find it very difficult to correlate what is happening over here, because these are all histograms. And though this is self-explanatory, when I'll explain this, what is happening in this particular indicator, it would be a child's play, a teenage with a normal understanding can understand how this indicator works, and it will be helpful to you in the trading. Because when we used to 164 version, there was not of that much benefit, because people were very much getting confused which side the market is going at this particular point. So, or in this particular price action, or in this particular price action. So I made this 218, and I made an enhancement of 218, that is in form of waves, because this indicator which David Weiss has first of all introduced. The basis of this indicator is in terms of like Wyckoff used to talk about waves. When selling waves are beginning to shorten, or buying waves are beginning to shorten, and selling waves are beginning to increase in time and distance, at that particular point we can say that there would be a possible trend shift. But many a times it happens. We see selling waves are increasing, but all of a sudden we get a big buying wave. So this is basically effort versus result. Many traders they tell me, sir, why this kind of behavior is happening. So you have to apply context to it. What contextual, like are we towards the resistance or are we towards the support? So many people find it very difficult in practicality to apply support and resistance. So for that purpose, we use 213. So first of all, I'll walk you through the recent trades which I have shared on my different groups. So I'll hide the indicator names to make the screen visible to you. So now, and I'll try my level best to explain you why we have initiated the trade setup. Like for example, sometimes I take trade when 218 and 219 is not in my favor, but I look at the price action and I look at what I'm planning to trade. If this 213 indicator is showing me a commitment towards it's showing me a probability that the market is in sideways, and then we are going to explode in either ways. Because this is a when we I like to see market in sideways, because I prefer to take trade after we come out of the sideways, because it gives us a better risk to reward ratio. So like for example, I have marked this trade as a sell. So what happened? The price started moving upward. This is uh, this particular indicator, which is quick trend trade. it is showing us that support or supports, you can consider it as a support or resistance or dynamic support or resistance. But having said that, it is more kind of a like, if a pullback occurs, I would rather love to go for a buy. This was a buying opportunity which was confirmed by both the indicators, and as it is green and it is also green, so I'll not get into. I'll in few minutes I'll explain what this indicator is all about. First, let me go through the trading. This one, trade setup. We got a pullback. Now, the color red means the overall trend is expected to price is expected to go downwards. And if once, as soon as I get the pullback, first pullback, I initiate a sell trade over here with trading my stop loss or ascertaining the exit based on my risk to reward, either 1:1, 1:2, 1:3, whatever the market easily offers me. So after that, I have initiated another trade at this particular point, considering that price might go upwards. Now, as we have broken down, we came back up. This would have been a short selling opportunity, but we have already shorted at this particular point. So this is somewhere I would plan to exit. And once I have exited the trade, I'm looking for a counter trend move. Now, this trade is based on, like for example, this trade was not based on this one, but here in when I'm using 219, I'm getting an idea whether there is buying there or not. So when I'll explain this particular indicator, you will get a fair idea what this particular 219 has to offer to us. So here I have taken a buy trade, considering we have demand because green suggests demand. Demand is greater than supply. I've initiated a buy trade over here. As soon as the price started moving upwards, I brought my stop loss to break even and I was stopped out. After that, we got another this trade setup at this particular point, which is a pullback. Now, here I have, as you can see, it is red. That means selling pressure is greater than demand. And because you can see red vertical histograms. So we got a pullback. I shorted at this particular position and trailed my stop loss back altogether to this particular level, or either based on my what you can say, my preferred way to exit whenever the price reaches my corresponding swing highs and swing lows after I initiate the trade. I have I book my profit or either 1:3, 1:1, 1:2, whatever I plan in that particular trade. So this was a short selling trade. Then after that one I got a buy pullback. Now this buy pullback, as you can see, this levels are lifting. So I prefer to buy at this particular point. Having said that, I considering this to be a effort was a result because now we are going upwards. We have cleared this particular level, and this particular level is above this particular level. So now considering that now market is going to go upwards in a upward trend, so I have taken this trade without confirmation of this two indicators. But the rest of the previous trade was based on the confirmation trade. And after this particular trade, which was initiated at 2897.895, at this particular point, I trailed this trade and exited somewhere here around, I guess, because this was a pain area wherein price was about to get retraced. And after that one, you can see once we are going upwards, we can see the upward staircase movement that suggests that this market is going up in an uptrend. But after that, we can see this we went into a sideways. Today's entire movement was in sideways. But here is a trading opportunity which I got. But again, it is a very huge risk compared to risk to reward. This is a breakdown and then a test in them. This trade is in accordance with this indicator, that is 218 and in accordance with 219. So that's the reason this trade has high probability of winning over. So now if I initiate, like for example, we'll apply the tool to it so that we can see arrow down. This would be the trade either on this or close of this particular candle, or either on the close of this particular candle, either of any. So one second, let me get rid of drawings. So if we see what is the shorting, if we get a shorting at this particular point, what is the risk to reward? It is given 1 is to 1.5 approximately, or 1 is to 1 approximately. So again, it depends upon people trading in gold whether they want to go for this kind of trade or not. But it happens, and it gives us an opportunity. Now the question would arise: why would have not considered this one as because in previous trend like for this, particularly in this one, the volume was greater, supply was greater. Here you can see supply is greater, but you initiated a buy trade over here. But why haven't you traded over here, or why haven't you traded over here as considering it as a pullback, or this to be a pullback? This would be a question which you would be having in your mind. So I'll address to it. The reason being said is simple. Here we have the beginning of the move. After consolidation, we got first, you can say, a rally going upwards. So many people ask me about rally-based rally. Can you code an indicator of this one based on rally-based rally? So if you consider rally-based rally, so I would consider this to be first rally, then a base, then rally, then a base, then rally, then a base, then rally, then base. So now I am seeing we have already, this is the first pullback which I always consider first pullback. So this is the first pullback after getting out of a consolidation and after going downwards, and this is the first pullback. This is the first upward move or upward stride. After that one, you can see this is not the first stride. So I will not consider this to be a pullback because this is a pullback. Ideally, this is a pullback because whenever the price is coming back to this level, it has to be considered as a pullback. But given the fact whether it touches this level or not, that is a different story. But it has touched down and then bounced back. Even if you would have initiated trade, you would have considered it too because either you would be, if you're trailing a stop loss, because I have a different strategy wherein, strategy by means I have a technique wherein I initiate my trade, I place my stop loss. As soon as the price moves, there are 3, 4 candles criteria which I have set. As the price moves upward, I bring my stop loss to break even. So even being said that I am stopped out at break even. So now, considering why I'm not considering this to be, because the reason being said is that here we are getting high volume activity, that too at a level wherein there is probability of price going downwards. But having said that, it is not showing us any commitment like this one, the selling commitment. So if it is not showing a selling commitment, neither it is an effort for the result. This is, you can say, price moving in upward and downward direction at equal volumes. You can see the volume level is almost equal. That is not decisive volume, whether we are going to see a downward move or not. Even if you haven't, if you would have, one would have initiated trade at the, like, for example, considering this to be a pullback, this would have been your sell trade. And my criteria, which I normally train my student around, which, like, as soon as the price moves into my favor, I bring my stop to break even based on the my strategy, my criteria of like 3, 4 candles. And as soon as it moves downwards, this one is also a break even trade. This one is also a break even trade. So I haven't traded this two one, but this one was something which, if I would have trailed do the manual trading based on my criteria, this would have been a profitable trade. Now now there is another trade opportunity at this particular point, pullback, and then price is moving upwards. So even if you want, you can play around with this trade also. But I haven't taken this trade because I'm expecting price to, because this is going in a sideways direction for me. If this level is forming like this and price is coming back and testing here, then this would be a new level formation, then I would initiate a buy trade over it. So having said that, this particular trade, this particular indicator is basically based on, many people ask me rally, base, rally, base, rally, base, rally, drop, base, drop, base, drop, base, drop. So this On every drop, we try to initiate a sell trade, and on every rally base rally, we plan for a buying opportunity on the pullback, given with the commitment by the volume and with the volume and uh, other confirmation which we are using in this particular trade. So now I'll come back to this one. Like we have already covered this trade setups. So what is this 218? It gives you it gives you a volume that is